good morning, and great morning, guys. Welcome to another fabulous episode of Exit Strategies Radio Show. Hey, I am your host, Corwin J. Millett, broker and owner of Exit Realty Low Country Group in beautiful North Charleston, South Carolina. Guys, if this is your first time listening to this show, you, sir or ma'am, are in for a treat. That is because our mission here is very simple. That is to empower our community through financial literacy and real estate education, guys. We're legacy building. That is what we do. So, guys, look, we've been having an amazing run. We've been having a tremendous amount of fun. That is because we have searched high and low, and we always focus on finding the one to bring you the best content and the best information. And today is no different. Now, I would be remiss if I didn't say happy shout outs and all that good stuff to all my people that listen locally in the Charleston area, whether you're in the Hollywood, what you know, no good, whether you're out there in Monkey's Corner, y'all know my mom out there around the bend. Look here, wherever you may be listening to us, I want to thank you from the bottom of my heart for tuning in. You guys make my day every time I bump into you and you say that you listen to an episode or you're a faithful fan and tune into the show. So guys, today we talk real estate, we talk money. And when we talk real estate, we know what we're talking about. We talk about that dirt, right? But when we talk money, we like to talk about how to get it. We talk about when you got it, what to do with it. We talk about how you can retain it, how you can make that money make money. We talk about all that kind of stuff. And today we got a guru. Again, we got the one who can tell you how to better and best manage your finances. We have none other than Anne Gannon, who is a founder of the Largo Group. And look, we're going to be talking about the Accelerator method today. So I want y'all to strap in because that means that we're about to take off. And how you doing?
Oh, doing great. Thank you so much for that awesome introduction. I'm so excited to be here. So thank you very much.
Oh, look, I can't wait because so for our listeners, guys, look, we are technically just past, quote unquote, if you're a business owner, April 14th, 15th, or thereabouts, that mid-April date, most business owners don't quite make it.
Yeah.
So they give us another date about 6 months away as we're having this conversation, guys. We are past that date. And for what it's worth, some of us are still,
Yeah. Oh, that's so true. That is so true.
And if you don't mind, give us like the 50,000 foot view of who you are, what you do, and let's get into a good conversation.
Yes. Founder of the Largo Group. I am CPA by trade. I worked for a big accounting firm. At the beginning of my career, I quickly realized that that's great and they care about that accounting firm, but they really don't care about business owners or the individual, right? They're just doing the return. It is what it is. And that whole world really is designed to not really have time to look forward. You're just looking backward. You're filing the return. You're done. And what I realized is that doesn't work for the individual or the business owner who's looking to optimize, do the best they can from a tax perspective. So the Largo Group is designed to reinvent the way that accounting works for business owners and individuals, in that we're flat fee, we're monthly, and the goal is that we're looking at 24 now, right? Not next year, but we're actually looking at the current year now so we can change it and we can make it better. And at least we can make sure that you understand what's going on so there's no surprises. And when that works and both sides come together, it really is a magical result because you're not frustrated and you don't hate tax season, but you really just see what you can do. You're empowered to make next year better than this year. And that's really my whole goal, is just to make it something where it's a great relationship for the long term rather than just transactional and filing a return and we're done.
So what I heard in there, the undercurrent is you are a partner for the business owner. So instead of it just being, okay, look, you see me once a year or twice a year when it's time for me to collect this information, put together a return and have you come in and review and sign it, and then I file it. So basically you are the person or a person who is a partner. So you're there all the time, not just that once or twice, if you will, to facilitate that. So you're there to help them and advise them on strategies from day one on how to manage and grow their business. Is that fair?
Yes. And really taking it one step further, that's how we came into the real estate world. So we started off, our specialty was hospitality, business owners or small business owners. And really over the last 5 years, our goal has been really trying to help business owners to educate themselves in real estate, to really see that, especially as we've gotten into this inflation period, right? Inflation for a restaurant is horrible, right? Food costs more, labor costs more, people don't want to pay more for the pizza. It's bad, right? But real estate likes inflation. Just educating them that there's a time, right? Everything has a season, and right now it's really hard to be an operator. But it could be something to think about. Building comes up for sale, or you do want to diversify into short-term rentals, or more passive, whatever it is, just to be aware of, like, inflation isn't always bad. We just might be sitting in the wrong seat. And that seat's okay, but we might want to look at other seats because there's things we could do for your whole picture with where we are right now. And so that's how we've come into the real estate accelerator method, really was the idea of real estate is a great tool. It doesn't have to be all you do, but it definitely has to be something that you educate yourself in, because it's a great way to grow your wealth for the long term.
So one of the things that we talk about here on the show, and so I always explain this to people that and even what attracted me to this industry a long, long time ago was a realization that people that had wealth had real estate. And that doesn't mean that that's how they got it. That doesn't mean they started there. People that hit the lottery, they hit the lottery, and one of the first things that many of them do is start buying real estate, whether they buy a home for themselves or family or what have you. So that was the base and premise, if you will, that let alone the history that I had, my family in real estate, that prompted me to this. So learning to manage the financial aspect of it to grow, I think, is incredible. So I love how you tie that in, that because sometimes, to be blunt about it, they don't think about that. They don't think about the tax liabilities and possible implications of flipping a property, right?
Right.
Yeah. Like, hold on. I made this money, and then, wait a minute, I got to pay what?
I know. It's so true. I know.
So,
but on the flip side, the savings there too. So yes, no, I agree.
Yeah. And see, that's why we need you, right? That's exactly why we need you. Yeah. So there's some savings in there that we may not know because we didn't seek to take advantage of them, or the person that we might have been speaking with had no idea. Because oftentimes people do this, but then they're using, and I won't call companies, but they're using, companies.
Yes.
But you're using companies that all they used to doing is a standard return.
Yeah.
They don't incorporate any of the strategies that we may talk about here as we go forward. So, and you wrote a book, right? What's the book?
So it's called the Real Estate Accelerator, but it's basically the idea, and I love what you said, because that's my starting point in real estate, is as I started to do tax returns, a good portion of your clientele is people who are retired, they're not as active as they were. And what you find is the one common denominator in all of my happiest retired clients is that they all have real estate. And it may not have been all they did. It might have just been something they inherited or whatever. But it has been this thing that really makes it to where they can retire comfortably. They're not as stressed as the retired people who are invested in the market. Not that it's a bad thing to invest in the market, but when you retire and all of a sudden there's a market downturn, you're watching your savings go away. Where the real estate people at least have more control, because rents will always go up and appreciation will always happen, even if there's ebbs and flows of that. And so you look at it and you're like, wow, those guys are pretty happy. Like, they're leading a pretty good life over there, where the market people are like sweating. They never know what it's going to be. So it's eye-opening, as I feel like I have a great seat at the table to so many people's lives, just because I have the opportunity to do the returns, and I can see what this does and learn so much. And so, from that was really where the Real Estate Accelerator came from, to say, it doesn't have to be all you do, but here's what it would look like to grow your net worth through real estate, because that's really what they've done. I mean, I have one guy who he bought properties for the last 20 years on the Outer Banks, like not really anything, that was just something he did, and he rented them out. And all of a sudden he sat down one day and he's like, do you know my net worth? And I'm like, yeah, I could only imagine. But he hasn't done anything, but his properties have just appreciated, and he paid them off. And those little bits, right there, eating the elephant one bite at a time. His net worth is pretty good. That's where the Real Estate Accelerator came from. It's just the idea of, I think it's educating people, because they get so caught up in, even annual cash flow or, return, and lose sight of that longer term benefit that real estate can really have.
So we talk about this on occasion, it kind of becomes, we cycle it back. Let me put it that way. The real estate is a long ball game, right? Yeah, you may pick up the short ball, something gets bunted, if you will, into midfield, so to speak. But really and truly, it is long ball. It is way outfield before you see results. It's not you buy a property today and tomorrow it's worth $5,000 or $10,000 more, so forth and so on. Now, have we seen times in markets, quote unquote, such as that? Yes. However, that is not the norm. That is not consistent. You have to look historically at real estate, which means you have to take larger swaths, if you will, of time in order to determine what the return is going to look like. And obviously the long ball, 50, 60-year long ball, is a very continuous and a better return most times than what the stock market will bring you over the same historic period. However, because we see short-term gains, people oftentimes just automatically go to that. It's disheartening because they're not committed to the long ball. I'm not saying that we want some short-term gains, don't get me wrong, but
yeah, I know.
yeah, so
and that's where I feel like, as the internet, when everyone's on Instagram and all these talking heads, I mean, so many times I've heard horrible pieces of advice like, oh, sell your property if it's not generating, like whatever. I'm like, I mean, first of all, again, I'm an advocate of the long game. I'm like, why would you sell? Even if it's break even today. I just feel like the one thing people miss, and they miss it in business and they miss it in real estate especially, is what is inflation. Right? And really, if you're break even today, 5 years from now, people are going to pay you more for rent. They just are, right? That's just inflation. You're going to pay more for gas and you're going to pay more for rent. And that property is going to be worth more. It just will. Like you said, there's going to be times it goes down, but it will come back. That's just inflation. That's not anything other than that. So if you understand that, then you're like, why would I get rid of this appreciating asset that's break even today? Because I don't have to do anything. It's going to be worth more. I'm going to owe less on it, and people are going to pay more to rent it. So those things coming together create this amazing outcome if we can just understand it. But if we get impatient and we start chasing the squirrel, like that's where we can make bad decisions for the long term just to get that immediate gain that we may not need.
So you advise people as it relates to real property. One of your niches is what? Short-term rentals? Is that one of the spaces that your clients operate in? So if you could, I mean, granted, that's interesting because some areas is like overly saturated, and then you see other places there's like a shortage of them. There's so much opportunity. Yeah. But why do you think that particular space is so popular now for real estate investors?
So I came upon this space a couple of years ago when a few of my clients during COVID started to say, I want to invest in this. And it sort of became like this one-off thing. And then several others were talking about it. So I'm always someone who loves to learn. And so I'm like, you know what? I'm just going to learn as much as I can about the short-term rental space, because in the tax world, nobody's talking about it. Most CPAs really don't understand the difference between the short-term rental rule and just the regular rental. And from a tax standpoint, they're completely different. The short-term rental is most of the time, again, everyone's tax situation is different. This is not tax advice, but in most cases, the short-term rental is considered ordinary income or ordinary loss. So if you're someone in a higher income space, especially if you're like a higher W-2 income, you can take advantage of a short-term rental in some cases, not for everybody, but in some cases, and can write that off against your ordinary income. So it can have a huge tax impact if done correctly. So I had no idea about this, but as a normal person walking around, like you said, you see short-term rentals everywhere and you're like, why are people doing this? Well, it's the tax rules where if I had the same property and I considered it just passive income, I don't get any of that loss if I'm in a certain bracket. But the short-term guys get all that loss. So they now can write that off. They get a huge deduction in the first year because they go out and get a cost segregation and they do all those things. And now they basically can start to strategize to buy 1 or 2 properties a year and just get themselves in a much lower effective rate than they would have been if they had stayed in the passive world. So that's really where it's an amazing new development. Now, most CPAs have no idea. And that's where even these guys who are going out and doing this work, if your CPA doesn't understand the rules regarding short term when it becomes ordinary versus passive. I've had guys who then turn around and they go, wait, I got nothing. Like literally, I got it deferred to next year. Like what? Well, no, like you have to make sure that both sides understand and you've met the criteria. There's like a 4-point test. I mean, it's very nuanced, but if done correctly, it can have a significant impact for your higher income earner.
Wow. So look here. I don't know if you saw it over here, Anne, but literally the top of my head just went up a little bit. And it came back. I mean, literally, you just blew my mind with that. Wow. Wow. Okay. Yeah. I'm loving that concept because, I mean, obviously, I'm assuming there's some people that are listening to this that maybe need to have that conversation with your person. And if you ain't got a person, you got one now because you need to call in. Like, oh, what you said? Talk to me about that. Explain that to me. Do I qualify? Not everybody, but obviously. So is that a method? So let's get to the book. I want to make sure we talk about the book. So is this like stuff that you're talking about in the book? Let's talk about
Yes. So basically saying, first of all, my belief is that everybody has a unique tax picture, right? Your tax picture is different than my tax picture. No one is the same. So ignore everybody on Instagram who's giving you tax advice because they don't know your picture. They have to know your picture first. So it starts with you understanding your tax picture. Where real estate comes in and, you know, especially the short term is the fact that you could potentially have more flexibility to really reduce your effective tax rate through real estate. So all of the benefits start to the beginning, long term, really playing it for the next 20 years. Well, if you could at the same time lower your tax today by investing in real estate, it could be a much different return from what you're going to get through additional 401k or additional market stuff, because of this ordinary income distinction. So the idea of the Real Estate Accelerator is to say, where do you want to be 5, 10 years from now? What's the net worth you want? And if there's a way to strategize through rules that allow it, where you could take advantage of a lower tax rate, you're investing more of that income after tax into property, you really can exponentially grow your net worth in a 5, 10 year period in a way that you just can't in market vehicles and other things because of the tax rate. Like some of these guys are sitting in low 30s, mid 30s effective tax rates, and that's hard. But if the real estate you can get like the mid 20s, I mean, that's a 10% savings that you can just then steamroll into more real estate investment.
So for our listeners, all right, so guys, look, let's envision this. Granted, I know some people is not your arena and maybe you don't have that much interest, but you may know someone. So if you have a higher income earner, like real talk, and in our area, we have ports, right? Our crane operators make $250,000 a year plus. That's substantial income.
W-2 paying like 35% tax plus the state. Exactly. And there's very little that person can do from a tax strategy perspective. It's almost nothing, right? You can invest more in your 401k, but that gets capped. The IRS has sort of eliminated the itemized deductions. So standard deductions. If you're married, it's one. If you're single, it's another. But there's not much left that you really could do. And all of a sudden, you're watching 35% of your income go away, right?
It's gone. Kissing it. It's gone. Yeah.
Right.
Yeah.
And if you did the math on the dollars that person's probably spending in tax, right? If you really took 250 and multiplied 30, maybe it's even 30%, that's significant, right? So if you took that same person and you told them to go out and buy short-term rental in downtown Charleston, right? And they invest, say it's a $400,000 property, and they take out a mortgage, right? So they don't pay that up front, so they're financing it over 30 years. That same person could probably get their tax down 10% at least through a very real method of taking a cost segregation on the new property, bonus depreciation year one. And now over the life of that asset, they're going to have some of that return every year will be sheltered through depreciation. But the strategy that I've seen, I have some guys who work in like the Detroit area, they've invested, they have 13, 14 properties between the two of them. And it's just because every year they go buy a new property and they do the same thing with the money. You're really not taking money out of your pocket. It's money you were already going to spend in taxes. And now you're just redirecting it into real estate.
And so for anyone else, like in that particular arena, that may be self-employed, maybe you got the truck driver who's the owner operator, you got cosmetics, all these people that make this money. Now you have a method that can assist you in offsetting your taxation, your level of taxation. So this is like good stuff. Like man. Like this is the stuff that dreams are made of. You know what I'm saying?
Yeah.
It really is. And let's make sure we get your information out for our listeners. How can people reach you, get in contact with you?
Yeah, so check out our website, thelargogroup.com. We have a lot of information on short-term rentals, real estate investing. But I think our big message is that for, like you said, Great Hour is a great example. It's good to just understand how you're taxed. Like it's easy to wait till April 10th and throw in your W-2 into TurboTax, and that's fine, right? And say, well, my return's simple. That's all I need to do. There's nothing I can do. But we have to start by understanding how we're taxed and what are the things that you could do within the rules to reduce your tax liability, because it's more than just the refund. You are paying a significant amount of money in tax every year, and look at that total number, because I think then it becomes more interesting to really put that as a priority before 12/31 to really make sure you've done everything you can. You've looked at it from a longer term strategy, because these are real dollars on the table every year.
That is huge. And we don't want to leave the money on the table. We want to get the money off the table, right? Look, like playing Monopoly, right? Like, man, it's real life Monopoly. And when that money hit on the table, look, I'm trying to figure out how to get it off. Hold on, here we go. Hey, land on.
Well, and I think the other thing to keep in mind is this isn't always about, yes, we want the refund and we want to obviously do this the real way through the IRS rules. But the other thing to think about is the old tax strategy of, I'm going to put money in a pre-tax account. That really doesn't work now that we're in such a period of inflation. Because taxes you're going to pay more in taxes when you retire. You just are, right? And it's a lot of it's inflation. A lot of it's just where taxes are going. So the old strategy of just, I'm going to put it in an IRA and I'm going to take it out when I retire, that just doesn't work anymore. And that's where we just have to be open to, where are we today? What will it look like when I retire 20 years from now? Like, it's never too early to just start to think about that, because that's where real estate comes in. That, this could be a vehicle that in 20 years, that property's paid off. You're just collecting rent. You're sitting on the beach. Life's pretty good, right? But if we don't see that picture today, we'll never get there in 20 years.
Exactly. And that is something. So, and thank you so much for touching on that, Anne, because we talk constantly on this show about mindset. We talk consistently about doing things differently so you can have a different outcome. You want that outcome. Nobody has done anything wrong if they made sacrifices today that allowed them to live that life later. And oftentimes there's a mentality and a mindset that they had a different opportunity. No, they took a different opportunity, because while they took, hey, I'm gonna eat peanut butter and jelly, I'm gonna eat oodles and noodles, I'm gonna eat whatever else for this time period so I can save some money so I can have towards this down payment. While they were doing that, there were other things that others were doing that were completely contrary and contrast to that, and their outcomes are different. We have that ability. Our listeners, as you listen to the show today, you have the ability to get started somewhere. And if you can't buy one by yourself, get you a partner. Let's talk about that. Let's figure out how we're going to make that happen. So, Anne, look, I have this question I like to ask our guests, right? It's that mic drop question, that look at that 2020 hindsight. If you had this thing to do over, meaning you could go back to when you first, and matter of fact, look, listeners, Anne ain't say this, but Anne was pro golfer. Yeah. So if you had this thing to do over, knowing that you was a pro golfer, that means that you made money back then. What would you have done differently that you think would have catapulted you far beyond where you are today?
So interestingly, it's real estate, right? My husband and I bought our first house in 2008. We way overpaid. And we ended up selling at a loss. It was just stupid. And it was not to throw him under the bus, but he just understand inflation. And I was like, I really think we could have held on to this. It was like break even if we had rented it. It was just one of those things. It was a ton, but it was just like a missed opportunity. And I think the people that hold on to those first properties that they own, that's really where and I think where we missed was just looking at the long game, right? Looking at like retirement. It's so easy when you're younger to like say, I'll worry about that later. And we got a big gut, but I think it definitely was eye-opening when you go look at what's that property worth now. You're like, see, inflation is real. So, but I think that's where just educating, it's never too early to start educating yourself in real estate, because opportunities are there. They're real. It doesn't have to be a ton of investment. And it's just hold for 20 years and see how happy you are. And I guarantee you're going to be pretty happy.
I love that. I love that. And I have a similar story. Like, man, look, if I could do this all over again, I probably would have did this as well. So I get it. I definitely get it. And I want to thank you for being on the show with us today. You've been a barrel of laughs, a tremendous amount of fun. And I appreciate the information, the context in which you gave it to our listeners today.
Oh, well, thank you so much. This was so much fun. I really appreciate the opportunity.
Awesome. Awesome. So for our listeners, guys, look, y'all need to reach out to Anne. Ask the question. There's no such thing as a dumb question, whatever. Let's take that off the table, guys. Let's come to, quote unquote, the well so we can do well. Ooh, I like that.
Ooh, I like that.
I like that. Let's come to the well so we can do well. So, guys, y'all please reach out to Anne. And again, from the bottom of my heart, thank you for being a part of the Exit Strategies Radio Show family, for dropping them jewels and nuggets on our listeners. And for our listeners, guys, y'all know how I feel. Y'all know what I say. Y'all know always put the two of those things together, and I give it to you this way, which is to tell you that I love you. I love you. I love you. And we're going to see you guys